Welcome to Diversified Administration's 2018 ACA training for our employer data gathering sheet. It will be presented by me, Sandro Vivas, and I'm the Marketing and Communications Manager and ACA Specialist here at Diversified Administration. So let's get started with a quick overview. We use two data gathering sheets for the ACA reporting. The employer data gathering sheet, which we'll cover in this video, pertains to information about the company itself. We also have an employee data gathering sheet, which we cover in another video, that pertains to information about employees, including their personal information, as well as employment and coverage status information. Before we actually look at the spreadsheet, let's look at the name of the file itself. It's quite long, as you can see, because it contains several pieces of information that allows us to better track your data. First, you'll see the year, which indicates this is for the 2018 filing. Then you have DAI, which stands for Diversified Administration Incorporated. Then you'll see the 1094C, which is how we'll transmit this information to the IRS. The file name then says employer data to differentiate it from the file that contains the employee data. OF is an internal code we use for tracking purposes. You'll notice the next part of the file name says the name of the company as in the IRS document. One of the things we do in order to guarantee that we're submitting your information to IRS accurately is verifying that the name of your company matches what the IRS has in its databases. Remember that mismatches between what's reported and what the IRS has in its systems might make that filing being rejected and not accepted at all. To avoid that, we ask our clients to provide us with an IRS EIN verification document, which is really any document from the IRS that contains the name of the company and its EIN. You will update the name of your employer file with the name of your company as it is in the IRS database. In other words, as it is in the IRS verification document. If for any reason you cannot find an IRS EIN verification document, you will need to contact the IRS to have them send you a letter 147C, or what they actually call an EIN verification document. We will provide you with a number to call. That's not a problem. And so for you to have an idea how this looks like, here is an example of letter 147C, again, the IRS verification, EIN verification document. As you can see, the information for this particular employer has been replaced, but this shows what the document looks like. Again, company name and EIN number, and the name of the form itself, which is letter 147C. So again, you'll use the name of the company in the name of the file exactly as it appears in this document. Now we've gone over the file name, let's take a look at the actual sheet. So let me bring it up. And here you are. If you were a client of ours in previous years, you will notice that it's very similar to the spreadsheet we used before. The first pieces of information we ask for are the company name and EIN, as they are on the IRS EIN verification document. Again, you can see here company name and employer EIN. Then you have the address, and after this, you'll see the phone number and the signer's name, title, and email. This will be the person whose information will appear on Form 1094C and who the IRS will contact if they have any questions. Then you will notice we have a blue section followed by a green section. Remember that you will only be reporting the cheapest, most affordable, individual-only plan available to all employees with no dependent coverage and no add-ons. So always have this in mind. We're not asking for any other than the basic individual-only plan. In the blue section, the first section, you will enter the plan with which you started the year. You will enter the name of the company, the name of the plan here. This could be any name that you wish. It's mainly for your tracking purposes because we will not be using the name itself. The following line, plan start date, will be the date in which the plan started. If you have a plan that started on January 1st, 2018, this will make your plan a calendar year plan. So you will enter, for example, 1/1/2018 as a plan start date, and as the plan end date, you'll enter 12/31/2018. If you did not have a calendar year plan, and your plan, for example, started on 11/1/2017 and ended on 10/31/2018, you will necessarily have, unless you didn't have a plan for the rest of the year, you will need to enter the plan that follows this first plan in the blue section. So you'll enter the name for the plan here and the start date, which in this case will be 11/1/2018, and the plan end date in this case will be 10/31/2019. So please be mindful of this. It's not two plans during the same period. It's actually the plan you started the year with and then the plan that followed. As you can see, there are additional green sections here for out of the ordinary cases, like if you happen to have a short plan year and you end up with 3 or even 4 plans during the year. These cases are very unusual, but we wanted to account for that just in case. And that's why we have those additional green sections. But normally, you'll either only use the blue section for a calendar year plan, or the blue section and the first green section if you have a plan that renews during the year. So let's continue. Let's put a calendar year plan as example again here. The waiting period. The waiting period is the number of days or months that the new employee has to wait in order to become eligible for coverage. As you can see, there are several options. There's date of hire, 1 month, 2 months, 30 days, 60 days, and 90 days. The most commonly used option is 60 days, so that's what we'll use here in our example. You'll also see that each one of the fields has a little pop-up that explains what information needs to go in that particular field. Coverage effective date. The coverage effective date has 2 codes, Code 1 and Code 2. Code 1 is when the coverage starts immediately after the waiting period. In other words, if the employee was to wait 60 days and becomes eligible on the 61st day, you will select Code 1. Code 2 refers to if the employee becomes eligible the first of the month following the 60 days. For example, if an employee was hired on March 15th, they'll be in their waiting period through May 13th, and he or she will become eligible on June 1st. So if that's the case, and that's the case that we mostly see, you'll enter code 2. The next row, coverage termination date, identifies when the coverage actually ends. If the employee is terminated, does the coverage end the date of termination, or does it end at the end of the month of termination? Depending on the situation, you can choose one or the other based on your plan. So we'll actually use end of month here because it's what we find most commonly. The next row asks if your plan meets minimum value. This is something that your broker should know. Putting yes here basically means that your plan is at least offering an employee the minimum that the ACA requires. Your broker likely sold you a plan that is ACA compliant, so we're going to want to see a yes here. Okay? But if by any chance your plan is not compliant, you'll have to enter no. But you will not be compliant and subject to penalties. So just be careful. Remember to double check and make sure that you want to see a yes here, that your plan is compliant. In the following row, in the following cell, you'll see the employee required monthly contribution. This is not the entire monthly premium. This is the portion that the employee pays monthly for insurance. This number is also not concerned with the plan an employee actually took. Remember, it is asking for the information about the least expensive plan they have available to them, and the employee-only tier plan of that plan. So here you put the portion of the premium an employee will pay each month for the employee-only tier of the lowest plan, not including any add-ons at all. So let's imagine that as an example, that the amount here is $100 per month. Below, you'll find the Affordably Safe Harbor section, and there are 3 safe harbors to choose from. These safe harbors pertain on how you actually determined that the employee required monthly contribution is affordable. There are 3 options, and they're explained here in the pop-up. There's rate of pay, W-2, and FPL, which is the federal poverty level, which for 2018 is $12,140 for individuals per year. So let's start with this one. Based on this, on the FPL, if your employee portion is less than $96.72 per month, we will definitely recommend using FPL because it lends itself to less scrutiny on the part of the IRS. If it's more than $96.72, we will recommend you using rate of pay, meaning that you will compare the amount versus the employee's monthly gross income and determine if that amount is 9.56% or less. Unless you have a specific reason, we will generally not recommend using the W-2 because the W-2 comes out at the beginning of the following year. And then you'll have to look back into 2018 and make determinations, and that can get sometimes complicated. And because this is time sensitive, we definitely want to avoid any delays, and therefore we recommend against using the W-2. So again, if the employee required monthly contribution is $96.72 or more, argument's sake, let's put 75 cents, you'll use rate of pay. And if it's less than $96.72, let's say it's $95, you should use FPL, federal poverty level. Row 28 gives you three options for funding. You have fully insured, self-funded, or a combination. If you are unsure, you should ask your insurance broker, and he or she will know what kind of funding your plan has. Normally, with a fully insured plan, the insurance carrier is responsible for all eligible medical expenses. In a self-funded or combination plan, the employer will be the responsible party for all or part of eligible medical expenses. So, depending on that, you will select which one of these your plan falls under. So let's use fully insured for now. An additional note is that self-funded and combination plans need information on spouses and dependents, which of course complicates the reporting a little bit. Also be mindful that if you started the year with a fully insured plan and then switched to a self-funded plan, or vice versa, you will need to report dependent information for the months you had a self-funded or combination plan. And this, of course, can get a little complicated if, for example, the employee is not employed at the company anymore and it's hard to get a hold of. So just have that in mind. Finally, in this section, you'll indicate whether or not your plan allows spouses and or dependents to enroll in coverage. If you always want to answer yes on both of these, because that will make your plan compliant. However, if you do not offer coverage to the spouse and or dependents, you'll have to enter no in row 29 and or row 30. Now remember, as mentioned before, if you have a calendar year plan that goes from January 1st, 2018 through December 31st, 2018, you will need to complete the blue section. So once you've filled the blue section, you are done with the sheet for the whole year. However, if your plan does not renew on January 1st, you'll need to enter information in the green section as discussed before. If you have a short plan year, you may need to complete again a second green section, or if you even have another short plan year, you'll probably have to also fill the third green section. Just as you did for the blue section, you'll enter the plan start date, as well as the waiting period, coverage effective date, coverage termination date, if it meets minimum value or not, the required monthly contribution for this particular plan, the affordability safe harbor, which is usually the same that you used in the previous plan, funding, and again, if you offer coverage for spouses and or dependents. Once you fill the pertinent information, you'll have to save your employer sheet and you'll send it to us for review. After we've gone over the data, we will either ask for corrections, return it to you for either further review, or we will mark it as okay if we're still missing information for the second plan is applicable. In other words, if you happen to have a plan that starts again in November, you won't have that information until then. and that is totally fine. You'll just need to submit the information with the sheet, with information for the first plan. And when you get the information, you'll enter it in the second section, and then we'll mark your file as final and send it to you for your records. Now, you will also may already know that the IRS has been sending out letters 226J, which informs companies about penalties assessed for the 2015 ACA reporting year. The penalties that we've seen up to now start around the tens of thousands of dollars, and I've seen at least one that's been over $500,000, but we do know that there are some out there for over $2 million. So by submitting accurate information, you may avoid these kinds of penalties. So very important for you to enter correct information in your employer data gathering sheet, and of course submit it to us for review. In addition to accuracy, all these filings have to be done in a timely manner. So the IRS has its own deadlines. There's a deadline of January 31st, 2019, by which we have to send out all 1085Cs to all eligible employees. So once you sign up, we'll need your employer data back to us within 2 weeks of the sign up. This will allow us to review it, get back to you, and address any issues, and have them corrected if necessary, with enough time to then address your employee data. There are also deadlines for employee data, and we need it 4 weeks after your initial sign-up. The second submission will be by October 12, 2018. If the second submission date is before the 4 weeks are up, the 4 weeks take precedence, so don't worry about that. The third submission will be by December 7th, and the final submission will be by January 9th, 2019. Now, January 9th will be the final date to receive anything, because we need to start producing your 1095s for distribution by January 31st, 2019, and then getting them ready for e-filing by March 31st. So please be mindful of these deadlines in order to be able to submit and review your information to verify that it's all accurate and ready. With that being said, thank you very much for attending. If you have any questions, please feel free to call us at 954-983-9970. My personal extension is 105. And of course, you can always email me at sandro@div125.com. Again, I thank you very much for attending, and I hope you have an excellent day.